Okay, so have you ever felt like just keeping up with the fashion world is a full-time job?
Huh, yeah.
Like it's going a million miles an hour,
hmm
and you want to wear the current stuff. You want to like be on trend, but you also don't want to like totally bankrupt yourself.
Right.
It's a tough needle to thread, right?
Yeah, it's like one minute it's oversized blazers, and then the next minute it's micro skirts, and it's like, whoa.
Now, what am I supposed to do with all these clothes that I just
I
bought?
know, right?
Well, today we're talking about a brand that's doing a really, really good job at navigating this tricky, fast fashion world,
hmm
and especially in denim, and that is Freakins.
Fiends, yeah, that's right.
So we've been digging into some articles. We've got a bunch of sources here, from Inc. 42 and FinTrackR and the Economic Times,
Yep.
to really kind of get under the hood and understand what's making this direct-to-consumer denim company tick.
Yeah. What are they doing that's making investors so interested?
Exactly.
Yeah.
What's the secret sauce, right?
Right.
So that's our mission today, especially if you're the type of person who really likes to, get the information quickly and have those aha moments without having to wade through, hours of podcasts and long articles and things like that.
Absolutely.
We're going to break it down for you and really look at why Freakins is attracting, some serious investor dollars.
Right.
What does this tell us about the D2C fashion landscape right now?
Yeah, great questions.
So where does this whole story begin?
Well, I would say the big kind of splash in terms of investor attention came back in July of 2023
Okay.
when Freakins secured a pretty impressive $4 million in seed funding,
Wow.
which comes out to about 33 crore INR.
Okay.
So that was kind of, that was their debut on the scene for a lot of people.
Yeah, and it wasn't just like a couple of small players chipping in.
Right, no?
This was some pretty serious venture capital firms.
Absolutely.
Matrix Partners India and Blume Ventures.
Big names, yeah.
Yeah. So that suggests that there's some real confidence there in what they're doing.
For sure. I mean, when you see those kinds of names getting involved at that early stage,
Yeah,
it's a pretty strong signal.
definitely. Yeah.
Yeah.
So what's really interesting too is that there were also a ton of angel investors
Oh, yeah.
that participated in that round.
Over 30 of them.
Yeah, it was something like over 30,
Incredible.
which is pretty unusual, right?
Yeah, you don't see that very often.
To have that kind of a broad base of support so early on.
Absolutely.
And that includes some pretty notable figures in the Indian startup world.
Yeah, like Ravant Fate
Right.
from Mosaic Wellness
Right?
and Krishna Kumar from Meisho.
Yep. So these are people who have been there and done that,
Yeah, they know what they're looking for.
and they're putting their money where their mouth is.
Exactly.
So that's a pretty strong indicator
Yeah.
that something's going right.
Yeah.
So, okay, so they get this big injection of cash. What are they going to do with it?
Well, they had some pretty clear priorities.
Mhm.
The sources we looked at pointed to a few key areas.
Okay.
One of the big ones was shoring up their supply chain.
Okay.
And they did that by setting up partnerships with specialized factories,
Okay.
not just for denim,
Okay.
but also for like knits and woven fabrics.
Okay.
And this emphasis on like owning a chunk of that production process
Yeah.
seems like a really key part of their strategy.
Yeah. That makes sense, especially when you're in the fast fashion world.
Exactly.
Where you've got to be able to move quickly and respond to trends.
Yep, speed is everything.
And then they were also talking about expanding their sales channels
That's right.
beyond just their own website.
So while their direct-to-consumer website accounts for almost half of their sales,
Okay.
they were also looking at expanding their presence on big marketplaces,
Right.
like Amazon and Flipkart and Myntra.
Yeah.
And what's interesting is that they actually had ambitions to move into physical retail,
Oh, wow.
like brick and mortar stores,
Right.
within a year of that July 2023 announcement.
Interesting.
So that's really interesting because it shows that they're thinking about that omnichannel approach,
Yeah.
which a lot of successful DTC brands end up pursuing.
Right. Right.
Yeah.
Okay. So beyond just where they sell, what else were they focusing on with this funding?
Well, they were also looking to strengthen their internal operations.
Okay.
Things like hiring new people.
Okay.
And really crucially for a fashion business
Yeah.
that thrives on newness,
Right.
They were planning to launch just a ton of new SKUs.
Oh, yeah.
New stock keeping units, basically new products.
Yeah, right.
And this really feeds into their model
Yeah.
of constantly offering fresh styles.
Yeah, I mean, when you look at the numbers, it's actually pretty mind-blowing.
Yeah.
They were talking about it dropping something like 100, 150 new designs every single month.
That's a lot.
Yeah, if you break that down, that's like 25 to 50 new things hitting the market every week.
Every week.
How do they even do that?
It's really incredible. I mean, that kind of frequency really underscores their commitment to that fast fashion ethos.
Right.
And being able to respond to those super quick trend shifts.
Right.
Especially among Gen Z.
Right.
Who are a major target for them.
Yeah.
And they broadened their scope.
Okay.
From initially focusing on women's denim when they were founded back in 2019.
Okay.
To include a men's line in February of that same year, 2023.
Got it. Okay.
So they were really moving quickly.
Yeah, so it sounds like this constant stream of new styles is made possible by that focus on controlling the entire process.
Yeah.
From the initial design and development stages.
Yep.
All the way through to manufacturing, or at least having really, really close relationships with their manufacturing partners.
Exactly. And Puneet Sehgal, the founder and CEO, was actually quoted in Inc. 42 talking about how important that integrated supply chain is.
Yeah.
To keep up with those super fast changing consumer demand.
Yeah, you've got to be on top of it.
You do. And they say that level of control, leads to better quality and faster turnaround times.
Makes sense.
Which are, key in this industry.
Definitely.
Yeah.
So they've also got a pretty impressive product catalog, don't they?
They do, yeah.
I mean, it's over 35 different categories.
Wow.
And more than 1,500 styles.
Yeah, that's a lot to manage.
It's a huge operation.
Yeah.
So when we start to dig into their financials, this is where things get a little
murky.
Murky, yeah.
Yeah.
So Inc. 42 reported a gross revenue in the range of 22 to 23 crore INR for fiscal year 2023. While the Economic Times said it was more like 25 crore.
Right.
But then FinTracker came in with a much lower number.
Yeah.
Like 70.6 lakh.
For the same period.
Yeah. And they also mentioned a loss of 15.43 lakh.
Okay. So big discrepancies there.
Yeah, it's a pretty big difference.
Yeah.
And I think it just kind of highlights how complex it can be to get a totally clear picture of the financials.
Yeah, especially for a private company.
Right?
Yeah.
Where they're not, publicly traded and they don't have to, release everything. But even with those kind of, those differences in the numbers, their ambitions for the future seem pretty clear.
Oh, yeah. They're not shying away from setting big goals.
Right.
Both Inc. 42 and the Economic Times reported that they were aiming for 100 crore INR in revenue by the end of 2024.
Okay, so that's a pretty aggressive growth target.
Yeah, very ambitious.
Yeah.
Yeah.
So to really understand where they fit in all of this, we should probably zoom out a little bit.
Yeah.
And look at the bigger picture of the Indian denim market.
Right, because it's not like they're operating in a vacuum.
Exactly.
So the denim market in India is actually pretty huge.
Okay.
And it's growing.
Okay.
Projections say it could reach almost 92,000 crore INR.
Wow.
By 2028.
Okay.
So there's definitely a big market opportunity there.
Yeah, it sounds like it.
Yeah.
And of course, they're not the only ones trying to get a piece of that pie.
No, of course not. It's a competitive space.
So who are some of their main competitors?
Well, you've got the big international players like the Levi's and the Lees and the Wranglers of the world.
Yeah, the classics.
Right.
But then you've also got a growing number of these homegrown direct-to-consumer brands like High Star, the Waku.
Yeah.
So it's a pretty crowded space.
It is.
But the overall potential for online fashion and apparel sales in India is pretty massive, right?
Oh, it's huge.
Yeah.
Forecasts say it could be a $112 billion opportunity.
Wow.
By 2030.
Okay.
Which is a big jump from the $20 billion it was in 2022.
Yeah, so that growth potential is definitely what's making this whole D2C fashion segment so attractive to investors.
Yeah, it makes sense.
So we heard from the founder Puneet Sehgal about the importance of the supply chain.
Yeah.
What were the investors saying?
Well, Rajat Agrawal, who's the managing director at Matrix Partners India, he really emphasized Freakins' unique positioning to tap into this Gen Z fast fashion trend.
Right.
And he specifically called out their innovative approach to the supply chain. their product design capabilities, and their smart use of influencer marketing to build a brand.
So that influencer marketing piece really seems to be a key part of their strategy.
Oh, yeah, for sure.
And it makes sense when you're trying to reach that digitally native Gen Z audience.
They're the ones who are influencing everyone else.
Yeah. And as we mentioned, their sales are pretty evenly split between their own website and those big online marketplaces.
Yeah, about half and half.
Yeah. It's also kind of interesting to look back at the origin story of the brand.
How did they get started?
Yeah. So the founders, they felt like there was a gap in the Indian market.
Okay.
For good quality, trendy denim options for women.
Okay.
They felt like the existing brands were kind of slow to adapt to new styles.
Okay.
And they didn't always cater to Indian body types that well.
Right.
So that understanding of a very specific consumer need really seems to have been a critical foundation for their business.
Absolutely. It's all about knowing your customer.
Yeah. So denim is obviously their main thing. But are they looking to branch out into other types of apparel?
They are. Yeah. Segal mentioned plans to expand into knitted and woven garments.
Okay.
Things like varsity jackets.
Okay.
But he also made it clear that denim is going to stay at the core.
Okay, so they're not abandoning their roots.
No, not at all. Denim is still their bread and butter.
Yeah.
Yeah.
So even though there's a lot of competition in the market,
right,
it sounds like they're pretty confident.
Oh, yeah. They're not afraid of a little competition.
Of all their potential.
Yeah. Segal actually said that he believes the market's big enough to support multiple brands, especially ones that are catering to specific niches.
Right, so there's room for everyone.
Yeah, there's a slice of the pie for everyone.
And he pointed to a pretty significant increase in their production capacity.
Oh, yeah.
Yeah, so they went from making about 15,000 units per month at the start of 2023 to a projected 80 to 100,000.
Wow.
By the end of the year.
So they're really scaling up.
Yeah, that's a huge increase.
Yeah.
So it's good to hear that alongside this rapid growth, they're also paying attention to profitability.
Absolutely.
Yeah.
Segal specifically mentioned their focus on EBITDA.
Okay.
Which is earnings before interest, taxes, depreciation, and amortization.
Right.
So that shows that they're not just chasing revenue growth.
Yeah.
They're thinking about building a sustainable and profitable business.
Yeah, you gotta make money at some point.
Yeah, you can't just grow forever without actually making a profit.
Yeah.
And it seems like they were somewhat insulated from any broader slowdown in apparel sales.
Okay.
That might have been happening in fiscal year 2024.
Okay.
At least at the time of that July 2023 reporting.
Okay. Yeah. So they were kind of, Yeah,
they were doing their own thing.
Doing their own thing, weathering the storm.
Yeah, exactly.
Okay, so now let's fast forward to April 2025.
Okay.
And things get even more interesting.
What happened?
Because they had another round of funding.
Oh, wow. Another one.
Yeah. So they raised another 25 crore INR.
Okay.
Which is roughly $3 million.
Wow.
In their Series A funding round.
Okay, so that's a significant step up.
Yeah.
From the seed round.
Yeah.
So clearly investors are still feeling very confident.
Yeah. I mean, and the fact that the existing investors, Matrix Partners India and Blume Ventures, they both participated in this Series A round.
Yeah.
That's a really strong signal.
Yeah, it shows continued belief.
Yeah, that they're doubling down.
Yeah, they're not just dipping their toes in the water anymore.
Exactly. They're all in.
They're all in.
So according to some regulatory filings that FinTrack got a hold of, this round was done through the issuance of Series A1.
Okay.
Compulsory convertible preference shares.
Okay, so that's a mouthful.
Yeah.
What does that even mean?
So basically, it's a type of investment that kind of has characteristics of both debt and equity.
Okay.
So it gives the investors a little bit of security up front.
Okay.
But it also positions them to benefit big time if the company really takes off.
Got it.
And the stated purpose for these new funds is to fuel, further business expansion and growth.
Okay, so more of the same, just on a larger scale.
Exactly.
Yeah.
So the valuation of the company has also seen a pretty big jump.
Oh, yeah.
Yeah.
How much are we talking?
So NTRAC estimates that Freakins' post-money valuation has surged by 2.3 times.
Wow.
Reaching 230 crore INR.
Yeah.
Or about $27 million.
Right.
And that's up from 102 crore after their seed round.
So that's a pretty significant increase in value.
Yeah, in a pretty short amount of time.
Yeah, that's impressive.
So it shows that the market really sees their potential.
For sure. Yeah.
And it's worth noting that the FinTrack article suggested that this might just be part one.
Oh, interesting.
Of a larger funding round.
Okay.
So we could see even more investment coming down the pipeline.
Yeah, potentially.
So just to reiterate what they do,
yeah,
Freakins specializes in trendy denim apparel for both men and women. They've got jeans, skirts, tops, jackets, cargo pants, you name it.
So really running the gamut of Gen Z fashion.
Yeah, exactly. Yeah. And their marketing strategy is still very much focused on influencer marketing, celebrity collaborations, and social media engagement.
It's all about being where the eyeballs are.
Yeah, exactly. Yeah. And that latest funding round really just validates their commitment to that approach.
Yeah, they're sticking with what works.
Yeah, if it ain't broke, don't fix it.
Exactly.
And after this latest round, Matrix Partners and Blume Ventures each hold 17.34% of the company.
So still pretty significant stakeholders.
Yeah.
Yeah.
It's also interesting to look back at those early financial figures that we talked about.
The ones from FinTrack?
Yeah, from FinTrack.
Yeah.
That showed revenue of 70.6 lakh and a loss of 15.43 lakh in their first year of operations.
Right, fiscal year 2023.
Yeah, which really contrasts with those higher revenue numbers that other sources were reporting.
Right, it's really a good example of how you have to be careful when you're looking at financial data.
Especially for companies that aren't publicly traded.
Exactly, yeah, because different sources might use different methodologies. Or different reporting periods.
Right.
And that can lead to those variations in the numbers.
Yeah, so it's not always apples to apples.
Right, exactly.
But the fact that these big venture capital firms, like Matrix and Blume, have continued to invest in Freakins, even with those differing revenue reports, really suggests that they see something there.
They see the potential.
Yeah, they see potential beyond just those initial top-line numbers.
Yeah, for sure.
So let's connect the dots for our listener.
Okay.
What does all of this repeated investment from these really reputable VCs tell us about Freakins and the broader D2C fashion market?
Well, it definitely indicates that these experienced investors see a lot of promise in Freakins' business model and their ability to capitalize on the opportunities in the Indian D2C fashion space. Their continued participation in those follow-on funding rounds is a clear vote of confidence in the company's vision and their execution and their future growth potential.
So it seems like Freakins has really kind of carved out a nice niche for themselves in this big market.
They have, they've identified a specific segment and they're really catering to it.
And that segment is
Gen Z.
Gen Z.
And their love of fast-moving denim trends.
Yeah, so they're really laser-focused on that digitally engaged young consumer.
Right.
So for you, our listener who wants the quick takeaways, the key things driving Freakins' growth, seem to be these super fast product cycles, the control that they have over their supply chain, and the really strong connection they've built with their audience through digital channels.
Those are the big three.
And even though those early fiscal year 2023 revenue numbers might tell different stories, depending on where you look, the fact that they've been able to secure all this follow-on funding and their valuation has increased so much really suggests that there's some real traction there.
Absolutely.
And that investors believe in their trajectory.
Yep. For sure.
So this is kind of the aha moment.
Okay.
Even in a market that seems as saturated as fashion, a brand that really deeply understands a specific customer segment and builds a really responsive business model that's tailored to their needs, like Freakins has done with Gen Z, can attract a ton of investment and show some pretty impressive growth potential.
Yeah, it's a good reminder that, one size doesn't fit all.
Yeah.
And that you can find success by really focusing on a specific niche and serving them really well.
Yeah.
And those varying early revenue reports are also a good reminder that you can't just look at one metric.
Yeah.
You have to consider the broader context and investor confidence.
Yeah, look at the whole picture.
Exactly.
So to wrap it all up, what are the key takeaways from our deep dive into Freakins' funding journey?
Well, the main points I think are pretty clear.
Okay.
Freakins has had success with both their seed and Series A funding rounds.
Yeah.
Which shows strong and continued investor confidence.
Right.
Their strategic focus on that Gen Z denim market.
Yep.
Backed up by their integrated supply chain and their influencer marketing. Right. Seems to be a winning combination.
Yeah.
And even though there's some inconsistencies in the early revenue reporting, the fact that they've secured more investment and their valuation has gone up so much really points to a promising growth path for Freakins in this dynamic D2C fashion industry.
And here's a final thought for you to chew on.
Okay, hit me. Given
Freakins' rapid growth
and the ever-changing world of direct-to-consumer retail.
Yeah.
What do you think are the absolute most critical factors that will determine long-term success in the fast fashion market? And how can brands like Freakins continue to connect with and cater to the always evolving preferences of those Gen Z consumers in the years to come?
Yeah, that's a great question.
Something to think about.
It is definitely something to think about.
Yeah.
Yeah.
Well, I think that's about all the time we have for today.
Well, that was a fascinating deep dive.
Yeah, it was really interesting to kind of peel back the layers and see what's making Freakins tick.
Yeah, they're definitely one to watch.
Yeah, for sure.
Yeah.
All right, well, thanks for joining us.
Thanks for having me.
And we'll see you next time.
See you later.